This is Rick Rule for Rule Investment Media, sponsors and producers of the Natural Resources Investment Symposium, held July 23rd through 27th in Boca Raton, Florida. The purpose of these CEO interviews is to introduce the attendees to the companies that will be exhibiting before the conference. Please note that every exhibitor is held in my own account or in accounts managed by me, which is a disclosure of conflict of interest. As I say, the purpose of this interview is to give you the high points of the various exhibitors so that you have the ability to reach out to the exhibitors before the conference and familiarize yourself with potential investments so that you can make the most possible use of your investments. Note, too, that these interviews are meant to be used in conjunction with the lessons that you will have learned at the Rule Mining Investment Classroom. Dawson Brisco is my guest today. He is CEO of Morien Royalty, pardon me. First of all, thank you for agreeing to this interview, and thank you, too, for your ongoing sponsorship and support of the Natural Resources Investment Symposium.
Oh, it's our pleasure, Rick. This is a marquee event in our industry. You know, it's one I'm really looking forward to attending. It's our first time, and I'm happy to be in your company today.
Well, you have a wonderful story, but before we get into the story, tell us something about your own background and the background of Morien. We'll get into the investment case later, but let's look at a little bit at the history and how it happened.
Sure. Morien was spun out from another company, Adrian, who I think you're familiar with. Adrian was focused on Asia gold. It had some bulk commodity assets in North America. It just didn't quite seem to fit. Peter used to say it created a bit of a schizophrenic shareholder base. We spun those out into another company to try to create something different than the other 2,000 mining companies that are out there, still out there. And I think we've accomplished that. Our focus is on royalties, as you know, but specifically bulk commodity royalties, a completely different, uncompetitive market segment, frankly, and one that offers very long asset lives for our royalties, in our case, 25 to 50 years. We also pay dividends, but not just dividends. Dividends is a high percentage of our free cash flow, much like what you would see at Freehold Royalties or Labrador Iron Ore Royalty Corp. We buy back stock, not a small amount, but 24% of our company. That gives us one of the lowest share counts in the mining royalty space. And then we stopped financing, just again, daring to be different. We haven't had a dilutive event in 8 years. We have ultra low overheads, and I mean $500,000 low. High insider ownership, approaching 20%. You'll see buying last quarter, the prior quarter, Q4 last year. The entire model at Morien is designed around stewardship, just basic, proper stewardship. You know, it's been instilled in me from Bodreski. I've carried it forward. He's our chairman. We'll speak about him in a moment when we talk about people, but it's designed to give shareholders like you the best torque possible to this high value royalty that we have that's just recently turned on. In terms of our background, we're very well equipped at the board level. Myself, as CEO and director, my background is in geology. I'm a PGO. I've specialized in bulk commodities, uranium, crushed stone or aggregates, coal for the better part of 2 decades. I've been intimately familiar and working with the Donkin asset, our core royalty, for over 10 years. John Bodreski, our founder and executive chairman, he's the former head of investment banking at Scotia Capital. Prior to that, or after that rather, he ran Orion Securities, which sold to Macquarie Bank, and then has since then sat on several boards in the royalty space. Mary Ritchie, our audit chair, is a former director of some highly respected organizations that you'd all be familiar with, including Canada Pension Plan, Royal Bank of Canada. Bo White is the director of finance at Sandstorm, $2 billion market cap mining royalty company. Charles Pitcher, mining engineer and former CEO of very successful coal producers. And then lastly, John Byrne, who I think you know was a former senior executive with National Bank and actually who helped finance one of Canada's first oil and gas royalty trusts. So lots of depth, lots of valuable experience behind us when it comes to managing this company.
Now let's talk about the principal asset, the coal royalty, and tell us too about the ancillary assets and your hopes of being able to add them to your revenue streams.
Yeah, I'll start with the ancillary ones. Black Point is a crushed stone asset. All of our assets are in Eastern Canada, and then we have one in the U.S. The ancillary assets are focused on crushed stone. The one in Nova Scotia is owned by Vulcan Materials. They're sort of in the Martin Marietta Lafarge crushed stone space. They're a 25 billion market cap, Birmingham-based company. Actually the biggest of its kind in North America. Great partners. It's permitted. We're awaiting a development decision. They pay us an advanced royalty that actually covers a third of our overheads, and so it's quite meaningful to us. We're optimistic we'll see that project go into production in the not too distant future. But there's no more exciting time for a royalty company than when its core asset turns on, and that's what's happened for us in the past 6 months. We're in the early innings of a really exciting ramp up at our Donkin mine, where we have a 2 to 4% royalty. The mine's saleable tonnage has actually increased fivefold, Rick, since we last spoke. That's just half a year, and it far exceeded our internal guidance. And like all bulk commodities, whether it's iron ore or phosphate, Donkin's ramp up schedule is guided by the procurement of contracts. So that's what they're doing. Contracts are being lined up. They have customers lined up and signed on long-term, multi-year contracts. In fact, if you were to go to any vessel website, Vessel Finder or Marine Traffic, and zoom in to the Cape Breton coal terminal, you'll see, as we speak, there's a vessel being loaded with Donkin coal right now for export to a new customer. And so the sales process is well underway. Our royalty from Q4 to Q1 went up by 3 times. So we're looking at a nice aggressive scaling up in our royalty revenue and our dividend along with it. But it's the scale of Donkin that gets us excited. You said, I think it was last year or the year prior in a uranium interview, that both small mines and big mines have big risks, but big mines make you big money. And Donkin for sure fits the bill of a big mine. It's a 500 million ton resource. The reserve alone supports a 25-year mine life. It's received 300 million in capital investment, more to come. And at full production, the royalty would be paying us about 20 million a year. If you use last year's prices, it'd be 33 million. But if you stick with 20 million, that's a big royalty by any royalty company's metric, especially from Morien, given our market cap is just 23 million today. So pretty meaningful for us. Exciting time.
So let's go by that number one more time so that people understand it. Sub $25 million market cap for a royalty that at conservative pricing could yield $20 million annually in royalty payments for a lifespan in excess of 20 years. Did I summarize that correctly?
Correct. Absolutely. Yeah.
For the benefit of the some of the viewers who are less familiar with the royalty business than they should be, tell us something about your operating margin on a royalty.
Yeah, we actually on the books have no equity in it, so the ROE once we hit full production is going to be off the charts. We'll probably be at the top of the food chain there. But we have a company that has $575,000 a year overheads, Canadian, for your U.S. listeners, and so. Some people say they have low overhead. We truly have low overhead. We've been surgeons with our balance sheet, not just since the onset of COVID, but for the past several years. You can go back and look at our slide decks for the past 10 years. There's a consistent theme, and it's stewardship. We take it very seriously at this company. So, our overheads are low. The EV is 23 million, 22 million. The net asset value after tax is 75. And that's using a heavily discounted coal price, a 10% discount rate. It's dragging out the ramp up schedule just to be conservative, to give us an honest number, because we don't need to finance, we don't really need to be over promotional in terms of how we talk about these values. We need to know what the inherent value is if we're going to be buying back stock so aggressively. So I think we've gotten the reputation of being somewhat honest with our own valuation, which is a good thing. But this is a case where the potential returns, they aren't commensurate with the risk. They far outweigh the risk, in my opinion.
Again, let's do some numbers. EV, less than 25 million. NPV 10, 75 million. Now, there would seem to be in the market a knock on coal. It's worthy to note that the largest year of coal demand on record was 2022 and likely to be eclipsed in 2023. So those people who are anti-coal, I would suggest, are first of all anti-human and second of all anti-economics, which will get us some hate. But away from the editorial, why don't you talk about what you see happening in the next 12 to 24 months that could be a catalyst? What are you working on? Is there a production ramp up that you see in the near term? What is it that shareholders can expect from you in the near and intermediate term?
We're a dividend paying company, and getting our dividend to 15 to 20 cents per share, these are all Canadian values, is what we're looking forward to. It's why we're buying back stock, while we're buying in on the open market. We're trading at 50 cents today, to put that in context. And so we have visibility on what we think will be a 30 to 40% dividend yield on today's share price. So that, if anybody feels they missed the boat on Labrador Iron Ore Royalty Corp, now's your chance, because that's sort of our model. We're kind of a collage of Ian Ball's former Abitibi meets Freehold meets Labrador Iron Ore Royalty Corp. Yes, we do have ambitions to grow the asset base long term, but the sort of the 12 to 24 month value proposition is going to be this high yielding dividend. And you nailed it on coal market. Your audience might be surprised by this, but coal has not some, but in my mind, the most attractive supply demand imbalance of any other commodity type. The world consumed 8 billion tons last year. It's going to be higher this year, and it's going to be higher next year, where all the models stop. The demand is strong because there's no substitute for steel making coal and the manufacturing of steel. And thermal coal continues to be the cheapest and most reliable source of electricity. Thermal coal is basically LNG without the costly infrastructure. No multi-billion-dollar gasification plants or reactors or specialized tankers. Just pile it on a ship, rail it, and dump it outside of the front of the plant, frankly. And with coal demand rising, you would think that supply is in hot pursuit, but it's not. Australia, South Africa, the US, Canada, exports are all down. And the reason is because of ESG constraints. Banks just won't touch coal anymore. And so coal startups are far and few between. I think we're seeing 3 new mines come online. And so we're seeing demand go up and supply stay stagnant, probably going down over the near term. And for those investors who understand, like yourself, that supply-demand imbalance and the massive gap that's opening up, companies like Morien, who have tremendous exposure to this market, look pretty attractive.
Dawson, I'm all about arithmetic, as you know, and I hope our subscribers are too. What we look to in these interviews is to extract from the CEO who the living, breathing human being at the exhibitor is that our investors can be in contact with, who can give them sort of a curated journey through the investment proposition. Who might that be at Morien, and what might that person's contact details be?
Yeah, there's no head of investor relations. That person is me. My cell phone, actual cell phone, not office line, is included at the bottom of every press release. So is the cell phone of our executive chairman, John Bedreski. We communicate directly with 75% of our shareholder base, which is very high for any public company, big or small. Whether you have 5,000 shares or 3 million shares, we have an open line of communication here. Other than that, our website, morienres.com, it's updated regularly, so that might be helpful as well. But my phone is ringing all the time, and I'm always picking it up. So please don't hesitate to call if you have questions. It's amazing how few people reach out to the CEOs of companies. I recently invested in a REIT for the first time, and this is a 10 billion market cap company, and I called the CEO and I got through to them. So I think there's a bit of a hesitancy for people to call CEOs, but if you don't get through to them, don't invest, in my opinion.
I would echo that 100%. Dawson, I need to say you aced this interview. Thank you for agreeing to it, and thank you for your ongoing sponsorship and support of our investor education series.
Thank you, Rick. Really appreciate it.